I'm sharing with you what the specialists suggest doing during a stock market crash or correction. Stay tuned.
3 separate devices. This is one device.
To associate with people who are better than yourself and act.
I'm going to make him an offer, Captain.
Hi everybody, I'm Sam and this is Antiversal. Today we're trying to figure out what should we do during a stock market crash or correction, which is what we're experiencing at the moment of filming this video. I'll be looking through the main points that the specialists in the area suggest that we should do, and I'll also share my point of view. If you want to see a really good video on the main ideas behind when should we buy or sell a stock and investment as a whole, check out my video on how should we trade investments, which is linked in the top right of your screen in the card section. So first thing, what's the difference between stock market crash and stock market correction? Well, corrections are usually sparkled by some kind of fear because of some kind of news or very little data that may mean some kind of bad news in the future, or some little weakness in fundamentals of the economy or companies at the moment. Sometimes corrections, especially smaller ones, can be triggered by seemingly almost nothing but the fact that stocks have been going up, right? So, a particular stock goes up 20%, 30%, it may have a correction of 3, 4, 5, 6% down without any news or something like that. While stock market crash is usually triggered by some kind of big fundamental shift or fundamental problems in the underlying economy, and the one that we probably all remember is the 2008 stock market crash, which was caused because of basically bad debt into real estate. So how can we actually figure out if the stock market is in a correction? Overall, the big indexes, like for example for America, that would be S&P 500, Nasdaq, Dow Jones, would be all down, and they may be significantly down, like 3% in a day, 4% in a day, or 7-8% in the last week. Actually change in the trend of the stock market, which is over a few days time period. Some, maybe most of the big leaders that have been growing and pushing the stock market up in the last bull run might be reversing and showing weakness. For example, at the time I'm filming this, weakness was showed from, for example, Alibaba, from Google, from big tech companies, Apple, even more stable stocks like the Dow Jones. So you will probably see a few days of downtrend with the big leaders going down with the market or even more than the market, and there would be maybe some big volumes of selling. Now, a correction most of the time means that there will be a lot of volatility in the market, and overall, where there is volatility, theoretically a lot of money can be made, right? Because at one day stocks are 4% down, and the next day they are 3% up, and so on. So if you can actually time that, you can make a lot of money on options and different kinds of investments. However, if you are not a seasoned day trader, and if you aren't actually done that and have experience with that and have also the mentality behind this, I would really say that it is dangerous and you would probably lose more money. Because at the end, the most important thing is to understand yourself and to stick by your rules, right? For example, I'm a long-term investor, which is why I don't try to play volatility during a crash or during a correction or volatility, even though that it's very tempting. So we have a correction, right? When would we know that, the correction or crash has ended, we're at the bottom and a rally is coming so we can buy in? Well, obviously that is very hard to time and nobody can really time it absolutely exactly. But overall, we can all look for a few common things that may mean that a rally is coming, or even if they don't mean that necessarily in the next day, stocks will go up and never go down again, maybe they can give us some kind of good buying point. After a correction, most of the time a reverse in the trend to a bull run comes when all of the major indexes, as I said, in the America, that's S&P 500, Nasdaq, Dow Jones, are all in the green for at least a few days. So that's 3-4 days with big volumes in the green, or there is maybe a little volatility, but they're all bouncing off that bottom that we're talking about, so we can see that they don't want to fall below that. During smaller corrections, the best sign is actually the indexes reaching a new all-time high. So for example, maybe there was correction of 7-8%, and then there are 3 or 4 days up and the indexes are already at all-time high. That most of the time that means that a rally is coming, so the stock market may continue going up. So somebody might ask, like, okay, but how can I actually predict that a correction is coming, or when exactly I can sell before a crash is coming? Obviously that is very hard to predict. As I said, nobody can predict it for sure, but a signs for that would be some kind of uncertainty coming into the future, or just a very long bull run, like the stock markets have been up a lot without sound explanations. And at the moment we could see that in the start of January stocks were like crazy up, which didn't make sense because nothing new was happening. And as we saw now, the market is in correction, so there is obviously a correlation there. So what should we as investors do? If you're like super long-term investor and you don't need the money and you have a lot of money, and that's just my opinion, is probably, especially in corrections, but probably for crashes too, as long as there isn't anything fundamentally wrong or change with your stocks, so you are absolutely certain with your investment decisions and you can reevaluate them and you feel that they're undervalued at the price they're at the moment, with having in mind uncertainties and facts for the future, then probably I would just stay with my stocks. And if they go down, they might go down 10-15%, I might just add in more shares, because if I told that they're undervalued at X, when they fall down they should be even more undervalued, right? But obviously if some kind of news come up, facts, fundamentals change, probably you should reevaluate. That's a common thing for even if there isn't a correction, right? But especially when there is volatility in the market, we should pay even closer attention to our stocks. Overall, if you would like to spend more time into it and be more hands-on, and you have different stock picks, no matter how undervalued they might be or looking good, they go down with the overall market, which means that when a correction is going on, your stocks will go down. So maybe a good decision would be to sell some or take partial profits from them. So when they continue going down and you see a reversal in the trend, you can buy up more or buy another stocks. However, if you're more of a passive and really long-term investor, especially if you're investing into indexes or ETFs, you should just buy more and more when the prices go down, because that means that you're buying on a cheaper price. And overall, those indexes, the ETFs, they follow the whole market, and in the long term the market always goes up, and that's a thing that it's just a fact in the last hundreds of years, and I don't believe that it would change in the future. As I said, during stock market volatility, meaning correction, crash, and then resuming a uptrend, it is very important to watch over your stocks, make informed decisions, not because of fear or because of feelings, but really because of fundamentals and what you believe is the right thing to do. And then also look around, build your stock watch list. Look at the stocks that are maybe going down a lot without any sound reason and they seem really undervalued, or maybe that amazing company that you wanted to buy in but it was really expensive until now, but now it's on a better valuation or something like that. So build your watch list, because the moment that you see that an uptrend is returning and a rally is coming, you'll be able to make better decisions and execute instead of waiting around and missing on profits. Overall, in and after a stock market crash or just deep correction, a really highly rated good companies rebound the faster, and that could be the Apples, the Googles, the really powerful companies with big earnings, with big moats, with big brands, and so on. So obviously they will always be safer, and they will probably also rebound faster than other companies that might grow a lot in a pure bull run. How can we actually see that a correction might be happening? Well, when everybody are bullish, right? That's why I said when the stock market goes up a lot without any sound reason, then probably there is something wrong, because when everybody are bullish, a saturation comes in where everybody have bought, there is no people to buy, and then maybe some kind of fear comes in, some kind of wiggle there, and what happens is a very fast correction, or hopefully not, it could cause a crash. In the same time, when everybody are bearish, right, and everybody have sold, probably there is nobody left to sell, so an uptrend comes up. That's what means that there is a bottom. So obviously Warren Buffett, we all know who he is. His quote is always on point, right? Be fearful when others are greedy, and be greedy when others are fearful. And I think I would leave you with this quote. Check out my other videos on financial education, success mindset, entertainment, technology. It's all for you, and I believe it could give you very valuable information. I hope you enjoyed this video. Stay universal on the path to greatness.